Now speaking, Dave Schwantz, Vice President of Finance and Investor Relations. Good afternoon, and welcome to the Sleep Number Corporation Second Quarter 2023 Earnings Conference Call. Thank you for joining us. I am Dave Schwantz, Vice President of Finance and Investor Relations. Please refer to the details in our news release to access the replay. Please also refer to our news release for a reconciliation of certain non-GAAP financial measures and supplemental financial information included in the news release or that may be discussed on this call. The primary purpose of this call is to discuss the results of the fiscal period just ended. However, our commentary and responses to your questions may include certain forward-looking statements. These forward-looking statements are subject to a number of risks and uncertainties outlined in our earnings news release and discussed in some detail in our annual report on Form 10-K and other periodic filings with the SEC. The company's actual future results may vary materially. We also want to refer you to our second quarter earnings presentation, which can be accessed on the Investor Relations page of our website. Now speaking, Shelley Ibach, President and Chief Executive Officer. Sleep Number announced the appointment of Francis Lee as their Executive Vice President and Chief Financial Officer effective August 14. During the second quarter, Sleep Number reported net sales of $459 million with demand down mid-single digits. Gross profit rate was 57.6%, and earnings per share for the quarter were 3 cents. According to analyst surveys, Sleep Number outperformed the industry and gained market share in the quarter. Year-over-year demand improved 7 percentage points sequentially compared with the first quarter, and combined May and June demand was down low single digits. In 2023, Sleep Number is focused on 3 priorities: taking market share by leveraging their brand building, innovation, and connected smart sleepers, restoring gross profit after global supply chain disruptions, and generating increased cash flows and reducing leverage. They have introduced their Climate 360 smart bed with active heating and cooling technology, and their next-generation smart beds now have temperature benefits with opening price points under $1,100. They are also driving media efficiency and effectiveness through optimization tools and simplified digital experiences. Initiatives to drive gross margin rate expansion include higher margin mix from their new smart bed introductions, pricing, easing of commodity costs, steady and predictable supply, and digital efficiency tools. They expect to generate more than $100 million in cash from operations in 2023. For the full year, Sleep Number has narrowed their guidance range to $1.25 to $1.75 earnings per share. They expect accelerating top and bottom line growth as consumer sentiment improves and the industry recovers from depressed demand levels. They are also focused on expanding their gross margin rate with a goal to return it to 60% within a year and 62% over the next couple of years. Now speaking, Chris Krusmark, Interim Chief Financial Officer. Thank you for the opportunity to present our second quarter and year-to-date financial results. For the second quarter, net sales of $459 million were 16% below last year, with demand slightly below our expectations. We leveraged our fulfillment network to deliver nearly 77,000 smart bed units with an ARU of just under $6,000. Our second quarter gross profit rate of 57.6% was consistent with our expectations. Focused spending controls resulted in operating expenses of $253 million in the quarter, down $22 million versus the prior year. We delivered second quarter EPS of 3 cents. Year-to-date net sales declined 8% to $985 million with demand down high single digits year-over-year. Our year-to-date gross margin rate of 58.3% was consistent with the prior year. We generated net operating profit of $37 million compared with $54 million for the same period last year. We generated 54 cents of EPS for the first 6 months of 2023 compared with $1.60 for the same period last year. We ended the quarter with $334 million of liquidity under our revolving credit facility and a leverage ratio of 4.7 times EBITDA, below amended 5 times covenant. We have updated our 2023 full-year EPS outlook to a range of $1.25 to $1.75 per share. For the third quarter, we expect EPS to be slightly below last year's third quarter EPS of 22 cents. For the fourth quarter, we are expecting demand to be up mid-single to low double digits with net sales up mid to high single digits. Now speaking, Shelley Ibach, President and Chief Executive Officer. I am pleased to report that our company has achieved significant milestones and operational improvements this quarter. We have revolutionized the industry with our investments, digitally connected customers, and world-class partnerships. Our highly engaged team has demonstrated their commitment to our purpose through their innovative mindset and dedication to our stakeholders. This has enabled us to position ourselves for significant value creation in the future. Now Chris, Dave, and I are ready to answer your questions. Raymond James analyst Bobby Griffin inquired, "Can you explain the acceleration in demand that's implied to reach the guidance? What factors are driving the confidence in demand going back positive?" Shelly Ibach replied, "Thanks for the question, Bobby. Our expectations for demand in the third quarter are up mid to high single digits. We've seen positive improving demand trends since the start of the year, and we took market share in the second quarter. July month to date was flat to prior year, which is where we expected to be. Our initiatives, innovation, and next-gen smart bed implementation, along with our next-level sleep campaign, are driving demand. We're seeing positive consumer sentiment, search numbers, and traffic as we head into the biggest event of the year. We expect the positive demand trend to continue in the back half." Raymond James analyst Bobby Griffin inquired, "Was the promotional activity in 2Q of this year similar to 2Q of last year, contributing to the improvement we saw?" Shelly Ibach replied, "It's clear that our promotional activity has been successful in driving unit sales. Our vertical model allows us to adjust and make changes quickly, which we did with our closeout activity in the second quarter. We saw a positive unit impact, but unfortunately didn't get the top-line lift we had hoped for. Despite this, our performance has been progressive all year, with July being a good example. We're now moving into higher ARU with our next-gen smart beds and expect to continue to drive our performance going forward." KeyBank Capital Markets analyst Brad Thomas inquired, "What changes have you seen in Synchrony's approval rate and amount approved, and how has this impacted your business?" Shelly Ibach replied, "Thanks for the question, Brad. Synchrony is an important partner of ours and our customers are important to their portfolio. We made adjustments to our financing strategy in Q2 which have been beneficial from a margin and productivity standpoint. We tested these changes and were pleased with the results. We've been able to reduce costs related to interest and our approval rates, sales conversion and financing are all in line with our expectations. To answer your question, no, we have not seen any negative impact from the changes we implemented." KeyBank Capital Markets analyst Brad Thomas inquired, "What changes have you seen in average transaction size and promotional activity since the last earnings call?" Shelly Ibach replied, "In Q2, we pulled forward our closeout activity to drive increased units and demand. We've made adjustments to our financing plans and discounts as a conversion tool. We're excited about our next-gen smart bed line with Climate 360 and the advancement of our advertising. We look at a number of leading indicators such as traffic, sentiment, our econometric model and our year-over-year 13-week trend which has seen positive progression. In the first half, we had a 20% increase to 2019, but we're not expecting as high of an increase in the back half, giving us room to outperform." Piper Sandler analyst Peter Keith inquired, "Shelly, what has been the consumer reaction to the M7 and i10 models since their launch? Have they moved up in your sales mix?" Shelly Ibach replied, "Thanks for the question, Peter. Our new models have been performing very well since launch and we're almost done transitioning to all one line in the marketplace. We're confident about our ability to do so and our promotional plans are on track with price sensitivity and the high value of our Climate 360 at the top of our line. We feel bullish about where we are." Piper Sandler analyst Peter Keith inquired, "Has there been strong demand for the initial products?" Shelly Ibach replied, "We have seen our closeout performance exceed our expectations. We have had limited activity in this area, so the true test will be in the coming weeks." Piper Sandler analyst Peter Keith inquired, "What is the current outlook on commodity costs and the expected relief or recovery for the year?" Dave Schwantz replied, "I'd say the commodity benefits we expected for the year are coming in as planned. We discussed pricing, commodity relief and Climate 360 mix benefits at the start of the year, and those three drivers are still on track. We're seeing additional opportunities on the commodity side for the back half of the year and beyond." UBS analyst Atul Maswari inquired, "Shelly, what is the risk of lowering media spending ahead of important launches?" Shelly Ibach replied, "Atul, thank you for your question. Media is a key part of our demand-driving formula and we expect to see greater efficiency compared to last year. A year ago, we had supply chain issues that limited our ability to offer our full assortment and impacted our delivery time frame. Now, with a full new line of smart beds and Climate 360, we are driving greater efficiencies while also driving traffic and search interest in our brand. We had 50 basis points of leverage in the first half and expect more in the back half. We use an econometric model to understand where to place our next dollar and how much to invest for the best return. We're approaching it prudently given the environment and our focus on taking share and expanding margin." UBS analyst Atul Maswari inquired, "Shelly, what is the greater risk to the 2023 guidance, a miss on the top line or a miss on the gross margin?" Shelly Ibach replied, "In Q3, we anticipate a net sales decline due to year-over-year backlog changes and one-time product portfolio transition costs. We expect mid to high single-digit growth in demand, but a lower backlog heading into the quarter. We're focused on fulfillment efficiency and anticipate building a little backlog in Q3. In Q4, we expect progressive demand improvement with mid-single digits to low double digits growth. This is a continuation of what we've been seeing in demand and includes our initiatives as they progress and the easier compare as we approach the fourth quarter. Dave Schwantz replied, in response to your question about gross margin, we saw a 58.3% rate in the first half of the year, a 300 basis point improvement from the back half of last year. We expect to maintain this rate in the back half of the year, with our initiatives intact and a stronger top line year over year. Our supporting deck on our website provides more information on our expectations for the back half of the year. Wedbush Securities analyst Seth Basham inquired, can you provide an update on pricing for the new line relative to the previous models? Dave Schwantz replied, Seth, when we introduced the new M&I models this year, we took $100 of pricing on those models. We expect 3 to 4 points of benefit from pricing for the year, including the $100 and the wraparound pricing from last year's actions. In August and December of last year, we took additional actions that are providing additional benefit in 2020. Wedbush Securities analyst Seth Basham inquired, what is the margin rate on the new products with limited prices? Dave Schwantz replied, I would say the margin profile is relatively similar. Wedbush Securities analyst Seth Basham inquired, what are the drivers behind the new line and what changes in features and functionality have been implemented to increase cost efficiency? Shelley Ibach replied, you're right, our next generation smart beds have temperature features across the entire line, starting at the C2. We're thrilled with the success of Climate 360 and the traffic it drives to our stores. Plus, customers are enjoying the increased comfort and support. The technology platform also sets us up for additional revenue streams through digital products and services. Additionally, a large percentage of common parts will help us scale up production in the future. Wedbush Securities analyst Seth Basham inquired, do you anticipate needing to be as promotional around other major holiday selling periods as you were for Labor Day? Shelley Ibach replied, we are confident in our ability to compete aggressively while still maintaining our closeout pricing. We have a well-thought-out promotional strategy that we have adapted to the current environment, and we are leveraging our promotional dollars and financing to maximize our top and bottom line results. Raymond James analyst Bobby Griffin inquired, do we expect ARU to meaningfully increase sequentially in 2H, and how will that contribute to improved demand? Dave Schwantz replied, hi Bobby, our average revenue per user, ARU, for the first half of the year was around $5,900. We saw a slight increase in Q2, bringing it close to $6,000. We expect the ARU for the back half of the year to remain similar to the first half, around $5,900. However, we anticipate a stronger ARU in Q4 than Q3, with Q3 likely closer to $5,800 and Q4 around $6,000. Raymond James analyst Bobby Griffin inquired, can you provide more detail on the pricing mix of the new line and closeouts? Dave Schwantz replied, in Q3 of last year, we did not have Climate 360, but this year we will have a full quarter of it. We introduced Climate 360 in October last year and had a good number of deliveries in Q4. However, we expect even more deliveries this year in Q4 with Climate 360, which will help increase our average revenue per user, ARU, year over year. Additionally, we implemented pricing actions last year in August and December, but Q3 did not fully benefit from those promotions. We anticipate that both pricing and product mix will contribute to growth in Q3 and Q4. If we look at the numbers, the back half of last year had an ARU of $5,200 per unit, which means we are expecting double-digit ARU growth for the back half of this year. Dave Schwantz replied, thank you for joining us today. We are excited to discuss our third quarter 2023 performance with you in October. We hope you have a restful night and look forward